Hello, Face. Hello, my trading warrior brothers and sisters. How you doing? And also want to welcome all our viewers from investing.com. I said hello to you yesterday, but I had the wrong day. Okay, so let's talk about some of the pressures in the market, which was a wicked Wednesday and not easy to catch unless you just had conviction based upon you had a real nice reversal the day before. Although the candle didn't close in green, there was no follow through. Here we are at another level. If I look for some positives, we're not confirming this low on the daily. On the 4-hour, it looks like we're working on a second drive. Doesn't mean that yesterday's lows were it. It could be retested. But I want to talk about what would help. Okay, so we've been talking around here at ForexAnalytix and in Face webinars that the Dixie was the new Vixie. So you can see the dollar is one of the problems market participants are pointing towards, and the pressure hasn't let up. I see a throw over here, and I don't know if anyone is still bearish a dollar. They've taken out these highs. The only high left is the one up here at 97, and then you have to go to weekly to get the big high up here at 104. I do think eventually that we're headed up towards 98, maybe 99, but I do think that there could be a little bit of a surprise of perhaps one more pullback, and it could be pretty deep. So I'm alert for it. The first sign that you have something wrong, and it shows up pretty good here on the 1 hour. So I drew this line before we blew through it on what us technical analysts call a throwover. So we've tested it once and we're bouncing off it. Next time candle, 1 hour, 4 hour, whatever, starts closing back under 96.20, that may signify at least the beginning of a correction in the dollar down to 95.70 or so. I'm actually looking for lower numbers. Okay, so that's one of the issues, that financial issues that the market's talking about. The other would be yields. It's funny, rates have been going up for a couple of years and the dollar's been strong for quite some time and the market's ignored it. Okay, so the market's ignored it for 6 months, a year, and then all of a sudden there's a tipping point. And I believe the tipping point is too many people standing on one side of the boat. It's as simple as that, just investor psychology. And let's not forget the force of gravity discovered by Isaac Newton when the apple hit him on top of the head. And I think a lot of what's going on there in the market is just physics, and it was due. So here's the rates really haven't been making new highs during the worst part of the sell-off in the market. Now it looks like they will. We've retraced to a previous very important level, was breaking out over 310, which was a high last spring and summer up here. So it does look like we're going to make another move up here and take out these highs. This looks like a simple correction to a major breakout. Getting back under 308 or so, then it's a different story. So they may still have this to contend with. They have the dollar to contend with, but I think the thing that they mainly have to contend with is that you had parabolic moves and things like Amazon and all the FANG stocks, and something about parabolas that when they end in a hurry. So here's a look at Amazon. I pointed this out to investor.com viewers about 3 weeks ago. I thought it had peaked. So, I'm far from perfect. I missed yesterday, the shorts in the market, and right now I don't know how to get back on. I'm not built just to launch at any price, so I'm going to have to see how things reset or wait for another train. But here's Amazon. So I was showing it up here as a failing rally. And I was talking about 1600 because this is where I had a 200-day moving average. So we got there yesterday. We'll see if Amazon can give us a bounce. I'm not sure this is the beginning of the end, and I don't think we're, going to 900, at least not now. So Amazon between here and the 50-week, 1581, might even be a buy. Okay, the weakness across NASDAQ has been the semiconductors. All right, and we all know what's happened to the Russell. So if the dollar gives up a little bit of its strength, we'll see if the market can deal with yields going to new highs, because that's the way it looks to me. There was absolutely no flight to quality while the market was getting hammered yesterday. In the old days, people would go to bonds. There was a little bit, not much, a little buying in the precious metals. Yeah, hi, Steve.
Good morning. I hate to interrupt,
Hey.
but out of curiosity, why would buying treasuries is a flight to quality? I'm
Well,
not asking why.
because it used, because it used to be. That's why.
Exactly. I'm not asking why it was in the past, because it's more than obvious. But I'm asking, why do we consider it a given that it's going to keep on being in the future? Because
I don't, but I do find it interesting. That's what's interesting to me. Traditionally, what used to catch some money flow during times of market turbulence would be the bonds, and basically it's turned into the dollar. The dollar is your flight to safety. It looks like.
To be honest, I don't see the dollar move higher being impressive in comparison to the impressive momentum in the move that we had in stocks lower.
Yeah, nothing has been.
Yeah, and something.
I'm just looking for hints.
Yeah, we have a U.S. economy that is running a $1.2 trillion deficit. I know that the official deficit was like 780 billion, but the U.S. had to borrow within the same fiscal year more than 1.2 trillion, because all the rest are in quotes of budget items. And that happens in a period of peace and prosperity, theoretically speaking, and expansion. So, during the next recession, the US will have to be issuing 2-3 trillion per year of paper. And who's going to be buying all that paper? That's why I'm asking loudly, why is it a flight to safety? You know what I mean?
That's what makes me think that this whole bounce in the dollar from 88 is just correcting the, the big decline that it had from 104, and up here 99 would still be a failing rally, and this is a big count, right? So say it was a 16 and we get 1.618 from par, that's going to give you like a $75 25 point decline.
We might even have an earlier failure if we have a disappointing GDP print. I think it's tomorrow, right?
I'm people who buy headlines today sell newspapers tomorrow.
Yeah, that's a good point. Anyhow, so
let me know. I'll be reading my newspaper when the GDP comes out. But that's pretty much it covers it. I just wanted to do a little bit of also before I hand it to Blake. You guys have to join, okay? Check it out for $1. And it's an amazing thing. And this is just the technology. I'm not even talking about the people and the content, and everything's there. And then if you get distracted and you have other things going, you're going to know by a push alert on your phone, on your iPad, on your workstation, and all of this is at your fingertips. And I'm not even talking about the advantages of an hour before me listening to Paulie's pivot points in the European crossover, or talking about, look, these people are smiling, they must be in the private member chat. See those green guys? They look pretty happy. So, then after FACE is over, you go into the private member chat, and Blake's in there and Steve's in there, and a lot of pros that trade for a living are in there, and they're collaborating. There's some rules, so I think I could do this. No mocking, respect, RESPECT. So after FACE is over, you guys could go in here. I think you could even check it out while you're taking a trial. and see the Jumbotron knows I'm here. Hi, Coach. You know, and they're sharing ideas all the time. You're sharing charts, and Amanda's in here, and all of her trades she shares with the community. I'm not going to say Amanda, you know, the professional trader and supports her daughter. Oops, I said it, Amanda, through her great trading efforts. But, you know, this is something you have to consider. And, you know, a buck for 10 days. So anyway, you'll know in 10 days, you'll know in a day. And then the other thing I wanted to mention was our sponsor right here, Forest Park Analytics with Trent and Justin, and they know everybody, as you can see. And if you have any questions or are searching for a better fit for from where you trade, or you're interested in getting our becoming a subscriber and not having it cost anything, there is a reimbursement program for people outside the U.S. and people inside the U.S. would get rebates. So-called Trent, Justin. And, you know, I do feel glad that the whole team was on the same page before this slaughter happened in the stock indexes. And, you know, we're not really here to brag what we, you know, made in our accounts. I made a little money. I didn't ride it all the way. Steve wrote it better than me because he has more discipline and patience, and Blake caught it, and the blog talked about it. So we did all we could do to make sure that people didn't have to sit here and watch their long equity positions melt, whether it's in their spec account or even in your 401k. You could have gone to some cash. So I'm glad that we're giving not just, you know, good content, but, you know, can kind of be a little bit of a messenger and a watchman for the people that are following us and hanging out with us and becoming subscribers, so that we could help them avoid the landmines that a lot of people are stepping on. So great job, team. You know, we call Steve had the number in the Russell. That's been one of the biggest bear market declines I've seen in my career. And, you know, I've had, you know, I'm not a rookie. So, I mean, you look at what Russell did and before we got there, okay? So it's not just like, oh, we're good guys, hang out with us. It's, yeah, you know, we care about you guys, but we also are the dream team. So Steve had 172.38 for a high before we came out of this triangle. And this has really been the bleeder. I mean, this is hemorrhaged. We've given back, we're all the way back already to where the rest of the markets may end up going, and that's flushing the early year low. But this was a great call. I think I did a tutorial on when a market gives you too much time to buy a breakout. As you could see, it was 4 weeks.
And the last part of the rally in the Russell, coach, was based on the fantasy, because in my opinion, I said it since the beginning, that was a fantasy, that anything that has to do with trade war would actually end up like benefiting a lot, you know, the local companies, and, you know, that the Russell would overperform, which it did for a little while because the market like bought into this rumor. But, you know,
they were safe haven stocks, just like what I heard on CNBC. Remember, for a few weeks before NASDAQ cracked, I said I heard an anchor on CNBC. The Dow was down, the S&Ps were down, but the NASDAQ was strong.
Yeah,
she actually said that. Investors were going into the FANGs as a flight to safety trade.
Yeah, good luck.
Flight to safety.
Yeah.
Anyway. Anyway, I'm curious to see what Blake has going into the end of the week, or maybe you're taking over now, Steve.
Well, you know, I got a few things to say before I go for durable goods orders in the ECB.
Okay, buddy.
So I can cover that in the chat.
I won't interrupt.
No, I appreciate it. And good morning, Steve.
Good morning,
just a few things as we're heading into the ECB. We're pushing right into some pretty key resistance. Remember, this is a bearish wedge in the euro dollar. So, you know, how we react around the 114.30, 114.50 level is going to be pretty critical. I drew this out yesterday when we hit the 127% extension. I mean, if you use ForexAnalytix and you go to basic technical analysis, you look at the 4-hour chart. That was from this morning, but this is from yesterday. You can see, you know, hitting the 127% extension, expecting a move back up. So hopefully you weren't caught short overnight, because expected the euro to bounce. And so we were bouncing. Now the question is, what are we going to do from here? And honestly, you know, it depends on whatever Mario Draghi says. If he comes in a little bit more dovish, because he's going to have to recognize the weak PMI numbers and the risks associated with the slowdown in the global economy, trade wars, and everything else. But if he stands pat and he's not like super dovish, and you know, continues to let everything roll off in December, and looks like he might go to some sort of tightening, more or neutral bias, and the euro could squeeze. And I do believe if we break the 127% extension, so in other words, if we break yesterday's lows, I think we are going down here. The flip side is if we break above, you know, 114.30, we might really start to squeeze, and you might see like a full-on reversal too. I mean, we could see a, you know, break above 114.30 and then a clearing of this this wedge, and then that would be extremely bullish for the euro. And I know, Paulie, if you're a member of ForexAnalytix, Paul Franco does the private webinar for our users an hour before this webinar, and he's extremely bearish the dollar right now. So, and you know, there's another thing I need to, I guess I should discuss too regarding the dollar. Let me grab this. If you guys don't. We as a company subscribe to the daily sentiment index, and you'll notice that the dollar index was at 90, which is an extreme reading, very extreme reading. So it's hard to be super bullish the dollar when you're at an extreme reading. That doesn't mean we can't register a 91 tomorrow and a 92 the next day, which means that the dollar can continue higher. It's just we're getting a little lofty as far as sentiment goes. Same with equities. Equities are really extreme bearish right now, registering 8 and 9, and so. I was short a little bit of dollar yen overnight. I closed some, you know, when we were down here at 112. I didn't think we were actually going to break down. We kind of flushed through it and bounced back. That it's not super surprising because equities are up this morning. However, when you look at equities, the scary thing about equities is we took out this big uptrend line. We took the 618 out, and we're bouncing right back to previous support, current resistance. So as long as we stay below 2,700 on the S&P, I still think the risks are lower. So and you go back to like the DSI, what I was just talking about, you know, we are at 8 and 9 respectively. I've seen the stock market actually you know, go down, and daily sentiment, you know, has improved. It can happen. I've also seen daily sentiment indexes stay extreme for, you know, several days at a time. So, but it is extreme. So you have to be a little careful shorting equities or shorting risk, I guess is the better way to put it. And that's why I had to reference the dollar yen. Actually, I think the GDPs are pretty important tomorrow. Obviously, not only the GDPs, we have core durable goods orders today, which are going to be also pretty important. You can see durable goods coming up here, and we have on core, we're expecting a nice improvement, and on durable goods orders minus food and energy, we're expecting it to drop from the previous meeting. So, and you can also see that here in the calendar as well. Coming up. And so with that being said, you know, it's with all this data coming out, you're going to have to be a little bit careful with the dollar and also with the ECB as well. Now, the cable, I actually bought a little bit of cable this morning, and I really, I'm wondering if we're even going to get down here to the 128.30. Ultimately, that's where I want to be a buyer. I want to be a buyer down here, but I don't mind chipping away at it a little bit, very small, knowing that sentiment in the dollar is so weak. I think if the euro ends up breaking above 114.30, you might see the cable back above 129.20, but you can see its highs today are 129.19, basically 129.20. That's the previous support. So if we take out those highs, there is a risk that we start to see a squeeze in the cable. And with Prime Minister May and her improved perception, their cabinet, maybe there won't be a leadership change. You know, that has improved the tone of the cable a little bit. But remember, this is all really more Brexit related than anything else. Yeah, obviously the cable can have some risk aversion too that plays into it. And one last thing I'm gonna say, and then I'll chat with Steve a little bit, banter with him a little bit, is gold. Where did gold go? Here is gold. So gold staged a rally overnight in Asia. I think the markets were a little freaked out that the S&P was under some pressure. So we pushed right back to 1240. 1240, if you guys don't know why this is such a big deal, let me just map it out for you. Okay, this is the breakdown point. You can see that dotted line. It's the breakdown point. It's also the 38% retracement of the April high to the August low. So if you're wondering why we are struggling at 1240, you know why. Now, if you guys are gold bulls, which I bought a little bit of gold yesterday, just so you know, personally. But if you're gold bulls, to get really bullish gold, we have to get above 1240, and we get above 1240, and then then that's when the game on for a squeeze. That's when this flag pattern really starts to play out towards 1270. So I think that gold is setting up nicely, and it's looking pretty. Hold on, really quick.
Done.
Sorry, I was just exiting a trade and telling the guys and gals in the chat room that I just got out. Gold's going to be really important. This is where I start to add is above 1240. So that's specifically what I'm looking at in regards to gold. Anything else that I really wanted to talk about? The Aussie's trying to find some support here at this big support zone, but big downtrend though. Kiwi, I traded this on the short side last week when we were up at 66 cents. I covered it as we dropped into the 50s, 65.50, and I've kind of left it alone since then. I've had some, matter of fact, I don't have the open order out anymore. I think I canceled it last night. When I had an order just for the last couple of days in case we got back up to 65.80 and never got triggered. So I'm just kind of leaving that one alone. The Swissy, we should probably talk a little bit about the Swissy. You notice that the high today is parity or par or dollar, $1. This has been a shocker to myself, a lot of the guys and gals in the chat room were surprised that during this little bit of risk aversion that we've seen, and I say a little bit of risk aversion, so I'm going to say that and quantify it. During this little bit of risk aversion, we haven't seen the Swiss franc really strengthen, right? So and it is a little bit surprising, but the real question is it? Because, you know, if you take like the NASDAQ, for example, and I'm just going to zoom us out a little bit. Let's go out to the beginning of 2016. When did Donald Trump win the election? He won right here that night, right there, right? The NASDAQ is up, or was up, almost 70%, okay? So in other words, if we wanted to retrace, really, like, and I'm just talking the NASDAQ, S&P is, you know, very similar. If we're really retracing, you know, and really starting to pull, I mean, we got a lot of distance to go. If like, let's say we retraced all of Donald Trump's presidency, that would take us to 4,500. Okay, so if you ask me right now, is the market really risk averse at this point? I mean, we've seen some selling, and I have to say that, yeah, we've, you know, sold off 10% from the highs, or 11% from the highs in the NASDAQ roughly. But, you know, you really want to freak people out as you start getting into correction territory when you correct more than 20%. So, you know, have we really, is there a lot of risk aversion? There's some, I mean, but is it enough to really freak out the quote unquote average investor or the market? Not yet. And I think people are looking at like these prices that we're at this week and saying, okay, let's see what happens this week, because, you know, we can end up, and I'm zooming in here now on the weekly candle. Let's say strong GDP, good durable goods orders, blah, 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 blah. NASDAQ pops back up to green, and we create a false breakdown in the NASDAQ. Well, then, you know, chances are we're going back to 7,300. So, you know, you know, is this market really risk off? I mean, like full on risk off mode yet? No, I think we're close, and I think everybody's watching price action very carefully this week. Same with the S&P, because if you look at the S&P, you go, okay, well, we're broken down. Are we? How about by the end of the week, like let's say today, we end up higher, and by the end of the week, it ends up being a false breakdown. Well, then the S&P is probably going to trade back above 2,800 in the next, you know, couple weeks going into the midterm election. So, and then how about if Republicans retain, you know, both the Senate and the House, let's just say, and then Democrats can't pull it through. Well, then the S&P might trade back up towards these highs. So I don't think the market's really quote unquote risk averse yet. I mean, there are definitely signs out there, but I don't know if we're in full on panic mode. If we are, I do think that we'll see, you know, the yen strengthen, and we'll see this yen flag pattern play out towards, you know, 110, which that would be the ultimate target down here. You know, you can see it, you know, playing out down there. I think that the Swiss franc will really start to roll over, but in the currency market, we're not seeing panic yet, but it could come. Oh, I got to pass everything over to Steve and Stelios, and don't forget to visit our sponsors. It's just Steve today. So Steve, are you there?
No, it's Steve and Joe actually.
Oh, Steve and Joe. Oh, you got Bloomberg Joe on today?
I have Bloomberg Joe on.
Oh
yeah,
this is so exciting, so exciting. All right, well, hey, I'm gonna let you three guys, excuse me, take it over. I got to get ready for durable goods orders and the ECB. So good luck today. Yes, good luck today, and I will talk to you guys soon.
Joe and Steve, Joe, about to begin.
For those of you that don't know who Joe is like you know,
like
every few weeks on Bloomberg. I can show you here if you can see my screen. You know, you can see. Yeah, here is Joe.
Let's see the post at the end. Joe,
this one you mean?
I think I thought Belu edited out. Okay. Joe. It went viral. It went viral. Yeah. A lot of guys, and I do mean guys, really like that.
Joe,
Hey,
Joe is
buddy.
actually amazing, and he's a very, very, very likable and sweet person as well.
Hey, look, I tried to get I know Raul Paul. I've interviewed him a few times. I go, well, hey, Raul, how about interviewing me on Real Vision? And look, Joe has been on Real Vision. That's not easy.
Twice already.
Twice. Yeah, it's like a whole. Did you mail back your contract to me, Elvis? I'm the Colonel Parker Pinkert here. You're Elvis. I'm the Colonel.
Joe, we can't hear you, by the way.
Yeah, we lost Joe. All right, well, I'll back.
No, he's unmuted, but I don't check your mic, Joe. Let me make you presenter and see if that helps.
The Dixie's the new Vixie.
I'm gonna take the screen back, but
yeah,
just
some dead air.
Check if your check your microphone or relog and just write to me because we can't hear you. Okay. So let me. What I want to know is actually what we care about. We got some numbers, by the way. U.S. initial jobless claims to 15.
Steve, can you hear me now?
Yeah, we can perfectly hear you, mate.
All right.
So let me first cover durable goods 0.8, expected was minus 1.3, so that was a good number. Durable X transports though is 0.1 versus expected 0.4. Capital good orders minus 0.1, expected 0.5. US initial jobless claims was actually as expected, so nothing much to see there. So having to do with unemployment numbers, really everything as expected. So Joe, what do you think about Draghi today? What do you think about Draghi today? What do you expect?
I think he's going to try and spin this as hawkish as he can, but I don't know if he's going to be able to.
Why do you think he's going to want to spin that?
Well, there's just because there's so many problems with Italy and the uncertainty around the UK. The currency's coming off, and he's going to try to keep it in line. So I don't think he's going to have a dovish tone today.
Okay. You think Draghi would welcome a higher euro, Joe?
You know what? I think he wants to. I think he doesn't want it to. He doesn't want people to get scared.
Okay.
Of what's going on.
Got you.
Yeah, and if I may add to that, Joe, I think there are two things we should take into consideration. First of all, inflation in Germany, and let's be honest, Germany is the boss, is already running above target. So the Germans are definitely not happy with a weaker euro because that will, put more pressure on local inflation. So that's one thing to consider. The other one to consider, as you said, is that he will definitely want to be, very calm, having to do with Italy, because don't forget that just, what was it, yesterday, the day before yesterday, Brussels actually rejected the Italian budget. So probably he won't like if the markets are, become more jittery about it. So if you ask me, Coach, the same question you asked Joe, in my opinion, Draghi would like to keep the euro more or less in a range. I think he would be happy. I mean, the euro has been more or less range bound for a period of time, roughly between 114 and 118. I think he's pretty content with that. So if he could keep it like that, I think he would be more than pleased.
If there's depending on the data that comes out, we had all those bad PMIs yesterday. I don't think that he's gonna. I mean, just remember. I mean, that combined with what's going on in Italy. You remember what happened with Greece when the euro just was. Everybody got scared and it just tanked. He doesn't want to cause a panic.
Yeah, because especially if something equivalent happens to Italy, the numbers are totally different. I mean, Greece had debt that was like less than 400 billion, and Italy has an outstanding debt that is roughly 2 trillion more than that. So, it's a totally different game if something goes wrong there. And the markets are not going to remain calm just by thinking that, it's okay, it's a small problem, it's easy to actually handle, because if something goes wrong with Italy, it's not an easy problem to handle, as simple as that.
Yeah, exactly.
So if you could, I can start covering, analysis, but I would be happy if you could interrupt me as many times as you like whenever Draghi gives, some kind of a punchline, or whatever he tells that might be on the dovish or hawkish side. Please let us know immediately. So far, we're seeing the euro being a little bit beat today, but nothing to write home about. As Blake mentioned yesterday, 114.30 is going to act as a resistance now. 114.30, 114.50, this area. We already saw a breakdown below it. So unless the euro manages to punch through this area, I think that there is a good chance that it's going to resume towards 113, the previous low. Tell me, Joe.
They're going to continue on hold through summer 19, continue to make net purchases at new monthly price of 15 billion euros until the end of 2018. Subject to incoming data confirming our medium-term inflation outlook, we will end the net purchases, I believe, after 2000.
Okay, so more or less no change to what we had so far. I think that most of the juice is going to come through the Q&A, because as you know very well, central bankers are very, very careful in wording the text that they initially read to the public. So I'm pretty sure that we shouldn't expect anything much different there. But sometimes in the Q&A, you get a smart question, you get an answer that actually gives you a hint, that something might be tilting one way or the other. So, we might get something more out of it from there. Anyhow, what I wanted to mention, things that actually happened, things that actually matter, that happened yesterday from a technical standpoint, and as I said, Joe, you can interrupt me whenever we have anything, is one, we closed in the S&P below the 2690 area, and that's actually key. I had mentioned days ago that 2690 is key, and the day before yesterday we proved it, because we got a lot of profit taking once we reached that zone. And in my opinion, a big part, for example, I was one of them. I don't mean I moved the market, obviously, but I mean, obviously, I wasn't the only person monitoring the same area. So I guess the initial rebound from 2690 was a lot of profit taking. But I also mentioned that as long as we keep, as the index stays below 2745, the bears are in control. And yesterday, actually, the bears managed to push through 2690. We even closed below it. So far today, pre-market, we have back tested this area as a resistance. So far, it's holding. And I have to say that, if we don't manage to punch through it, there's more selling coming, with the next area of support being at 25.5. Yeah. What did
Johnny
you say?
says ECB ready to adjust all instruments as appropriate. Incoming data has been weaker than expected.
Which is a dovish message, actually. Let's see what the euro is doing. Because saying at the same time that they're ready to adjust, but the previous data have been weak, is more or less like saying we are ready to adjust, and since the previous data have been weak, we might need to adjust on the dovish side, right? That's how I interpret the message.
Right.
Yeah. Okay, but so far, to be honest, the euro does not seem to be selling off based on that statement. We're still oscillating a little bit below the resistance zone. Let's see if he says something else that will actually end up moving the market. Now, having to do with the USD CAD, we had a lot of questions about the USD CAD. Both I and Blake actually had the position as well. And I was also having this conversation extensively the day before tomorrow. But we said yesterday that, crude has been dumping. USD CAD had not been following higher, breaking higher, following crude, because it's inversely correlated quite nicely. So if we got a neutral or even a dovish BOC, we would actually probably see a punch through the 131 level, which would quickly lead at least towards 133, if not towards the top of this ascending channel, which currently passes from 135. We actually got quite a hawkish BOC, definitely more hawkish than the market expected. That led to an initial sell-off, but I have to admit the following. Just look at the daily close yesterday. I mean, we ended up having a candle with a quite long lower wick. We held the 130 area on a daily closing basis. So far today, we have an inside candle. So despite the BOC, first of all, hiking, which was almost a given, but it wasn't 100% priced in. It was like something like 95% priced in. Despite the BOC hiking, despite the BOC having a more hawkish rhetoric than initially expected, we still see USD CAD being very decently bid. So to be honest, my initial thesis hasn't changed. I still see the possibility of a break higher, and I still see this move lower as having clearly corrective characteristics. Obviously, the closer we are to the channel resistance, and that's also what I wrote yesterday, the day before yesterday night when we were talking with Joe on the chat room about it, the closer you are to resistance, obviously the reward to risk ratio favors being short because you know you have a very tight risk. But I don't know, this formation looks corrective to me, and my gut feeling still tells me that eventually USD CAD might make the move higher. And as I said, yesterday's daily close, given the BOC's language, doesn't look that bearish to me. So we also had a question about it. That's why I'm from Bill. So that's why I started by covering this. So on the other hand, I think Paulie mentioned it as well. I caught part of his webinar. I had mentioned it as well days ago. Both Aussie and Kiwi seem to have stalled, so they remain within their respective descending channels. But one, for sure, the downside momentum has waned, and that is something we have to take into account. Now, having to do, and speaking about divergences, today actually I closed my pattern in play just barely in profit, more or less flat actually, in the USD yen, simply because the market has been selling off and selling off and selling off, and I was viewing this, and it can still end up being like a bear flag because the characteristics are still corrective. But I really don't like the fact that we haven't seen a bigger move given the risk off that we've seen. So
yeah, that's a message. That's good, Steve. That I noticed that too. That's why I was surprised how big the fall was in equities, U.S. dollar yen holding up.
Exactly. And something, Coach, I gave it a lot of thought, and I said to myself, is it impossible to see it just break down with a time delay? The answer is no, it actually isn't. That's why, despite closing the PIP, I have to tell you that on a personal basis, I've still held half of my position. Personally, I closed half of my position. But I have to tell you the following. Although it still can do that, and technically speaking, if I didn't monitor any other market and I just had this chart in front of me, I would say, yeah, there is a very good chance that, USD yen is going to push lower from here.
There's just as good a chance that it failed at 38 that it could rally to 50 to 61.8 here.
Yeah, exactly. We might see a rebound in the stock markets, which is due in the short term, and that might actually create one more leg higher towards 113.50 before then seeing, for example, a move lower. So I'd rather hold back, keep some ammunition so I can short higher as well, and build a position with a higher average. And if it breaks down from here, fine. But as I said, the fact that yen is usually flight to safety and it has done absolutely nothing in this case is something that I don't like, because the first thing it comes to mind is the following. Okay, let's say that tomorrow we get a good GDP number, and the market decides that, okay, we've anyhow sold off a lot. Let me mention here that the DSI, the Daily Sentiment Index, for the Nasdaq and the S&P have dropped to single-digit numbers, which means that sentiment has also now shifted to very bearish, right? So we can definitely see, and you said it yourself a few days ago, that bear market rallies, even if this is a bear market, which for the time being, we just have to treat this as a bigger correction to a very long-term bull market. But even if it is a bear market, we know that bear market rallies can be really vicious on occasion, right? So what happens if we get something like that? Most probably, as you said, the USD yen can easily jump towards the 113 area. Actually, if I remember, Joe, that was one of your recommendations as well.
Joe said
in one of your Real Vision interviews, you said a retest of 113 is going to be a good opportunity to be short the USD yen. Am I right on that?
Yes, I did
on
say that.
Bloomberg, on Bloomberg too.
Yeah, I think we got up to 112.90 or so.
Yeah, we went very close to that, but why not? We might have one more push higher, in which case, I never look at a specific level, almost never. I like to talk about zones. In this case, I very, very much like the zone between 113.10 and 113.40, because we have the 50% fib, we have the 61.8% fib there, and we also have some previous highs and lows on that same area. So, why not? We might get from the market something like, another little bounce here, and then finally get, that breakdown that I was expecting might take place earlier. So we might get something like this. Okay, so I covered that as well, and I wanted also to explain why this. Just look at the USD CAD, by the way. It's now positive on the day, because we were talking about that before. So now, having to do with the rest of the indices, let me say that we're seeing quite a nice rally in the DAX today, but don't let yourselves get fooled. I said immediately that once we break this head and shoulders formation, I was saying that for months, it's game over. Even when we found support in 11,450, I said that any rebound to 11,800 should be sold, as we saw here. And I'll keep insisting on that. As long as we remain below 11,800, any rally should be sold. As simple as that. Simply because the target of this head and shoulders formation is a lot lower. So until then, I have no reason to be looking higher. Obviously, the first strong area of resistance is now going to be this previous low, which is roughly at 11,450. Now, having to do with the FTSE failed at the resistance we had indicated at 7,100. Obviously, that remains resistance. At some point, we have to see some bigger rallies in the indices, but until proven otherwise, all the indices are in sell the rally mode, right? Because even if this is a corrective move, just for example, just to put in context, Blake showed it just a few minutes earlier. He showed, for example, how much higher the Nasdaq has moved since the end of 2016. So, you can easily get a corrective move lower that's going to be like 20-something% and still maintain, the long-term bullish move in play. Anything new that we got from Draghi as I was talking, Joe? Anything worth mentioning?
One thing he said is that just mentioning the risks, the stalemate between the U.S. and China, Brexit, Italy, and trade uncertainties. So he's like I was trying to say before. He doesn't want to create any
panic. Yeah,
he doesn't want to create panic. He's out there. He's saying what's going on. He doesn't want to rock the boat.
And to be honest,
hard to distinguish factors that are transitory and which are permanent.
Okay, and to be so far, he has done a good job in the sense that the euro seems completely unfazed. I mean,
he said weaker momentum, not downturn.
Yeah. Okay. So more or less, we're seeing the euro completely unfazed, and the euro is exactly where it was just before he started speaking, which means that so far the market is interpreting everything he has said as 100% neutral. So
Yeah, exactly.
more or less, I think that's what he wanted to do, right?
Sure, that's what I think as well.
He
Hey,
doesn't
Steve,
want
Euro
Yeah.
pound with all of this going on is back to the breakdown. It's good or bad from here. You may want to take a look at it.
we're going to have a look at it immediately, and euro pound is currently facing triple
Right.
confluence of resistances. Triple.
That's
Why
what
is
I
it a triple?
told you.
Actually, I was lying. It's a quadruple confluence of resistance. And why is that? First of all, this is a horizontal support resistance area. Second of all, this was the 50% fib. We're backtesting it now. Third of all, this was the extension of the descending channel that kept euro pound confined for something like 9 months or whatever. So we're backtesting that. And it's also this descending channel that I was monitoring. We overthrew it a little bit on our way down. So we're backtesting that as well. So needless to say that from a risk reward perspective, being short here makes sense because you have a very short risk. It might head down from here. As I said, multiple confluence of resistances exactly at this point, a very key level. It's going to be important if the pair closes above it, it can change the game. But if the pair actually gets rejected from here, I think that we're at least going to come down and retest this 87.30 area. So let's revisit that tomorrow because we are at a very critical juncture. There is no question about it. And thank you for bringing it to my attention. I don't know if I would remember to actually mention it. Now, having to do another instrument that has actually failed to impress given the move that we had is gold, given the fact that traditionally it has also been considered like a hedge for turmoil in the markets. So far of course so far it's not that the financial system seems to be at risk, because to be honest, gold would have a rally to safety more in the occasion that the market would be afraid that the financial system might be in danger. In this case, to be honest, we're not there. We've seen a rejection from the 38.2, but on the other hand, we're holding above this triangle. So I still have 1/3 of my initial position from 11.99. I don't consider it impossible. I'm hoping that we will see one more leg higher towards this 12.60, 12.65 area that we have a confluence of resistances. But on the other hand, if I see gold fail below 12.17, I think that's it. I think that we're moving lower once again. And that's definitely going to be a bearish development. And speaking of which, if I extend this triangle's line and I clone the parallel, as you see, there is a very worrying scenario here, an alternative worrying scenario here, if you want to be bearish, and that is that was simply a bear flag, right? Because as you see, it perfectly channels the move higher. So far, perfectly channels. So there is a chance that we've seen a high in the gold. I'm not convinced yet because we remain above the triangle. But if I see us fail for a few more days to pass above it, I'm going to take profits on the last third of my position, and I will start looking much lower, because even initially, and Coach, you remember that very well, I said that the breakdown from this trend line is a bearish development, but on the other hand, I was looking a rebound higher as part of a corrective move. So anyhow, I was treating this as a corrective move, and even if it moves up to 1260, it can still end up being a corrective move. Only if I see a break above 1260, 1265, I will start considering that something else is playing out. So I'm in the lookout, and I don't want to lose the profits on the last third of my position. If I see a failure here, I have no reason not to trust it. And the exact same thing applies to silver. Silver, on the other hand, is triangulating. It's within a triangle, And usually triangles have the tendency of breaking lower. So if gold fails there, in most likelihood, silver is also going to fail from the triangle. It's never going to manage to push through the resistance, and it's going to continue lower as well. Now, on the other hand, of course, if we see a break above this resistance in silver, I do think that we're headed to 1520 next. So this trend line is key. It has already proved several times. I mean, it acted as support there, as resistance here, as the resistance again here, 2 consecutive days, the day before yesterday and the day before that. And so far today, we almost tested it once again. So definitely a trend line to monitor. Now, speaking of the metals,
just so you know, they barely talked about Italy. He said that he's confident agreement can be reached, and that there may be some spillover from Italy, but it's going to be limited. Apparently they're not concerned about Italy at all at the moment.
Yeah, of course, don't forget that the Italians, first of all, let's not forget that Draghi is an Italian. Second of all, let's not forget that obviously the ECB would want to underplay the possibilities. And third of all, let's be honest, I said it the previous days multiple times, I think that if push comes to shove, the Italians will capitulate. They will change the budget. They won't let the situation go out of control. I think they should be smart enough, having seen how the market can punish countries, in occasions like this. So if the yield spreads don't start calming down on their own, and if the situation starts going out of hand, I'm pretty sure that they will capitulate. And I think that the market so far seems to be having the same opinion as I do. That's why we don't see much of a breakdown.
Yeah, I think so too. I think it's more a lack here of his lack of dovishness is causing the euros to hang in here.
Yeah, and it's doing exactly that. It's hanging in there. Yeah. Okay, so metals. Let me continue with the rest of the metals. So copper. Two interpretations here with copper. First of all, as long as we're holding above 272, there is still the possibility to see one more push higher towards 294. Joe, if you can mute yourself because I can hear myself back.
What?
If you can mute yourself because I can hear myself back from your speakers.
Okay.
Thank you. Thank you very much. Of course, unmute and interrupt me anytime, you have anything, obviously. Yeah. So copper, I still see the potential for one more push higher towards 294. We're still holding within a descending channel, which, to be honest, doesn't look impulsive in any way. We are also holding this horizontal support area, which is horizontal support area. The 50 DMA is also there. Previous high, previous lows. So, I still don't quit on my interpretation that something like this might transpire. But if we do lose to 72, then we're just headed lower from there. Okay, so my bias is still that we are in a correction, but that correction has a good chance of having one more leg higher. But if we lose to 72, the chances that we're just going lower from there are increasing exponentially. Now, that's what we expected. If you remember, I was very clear about it in Palladium. I said two things when we were in this triangle. First of all, the fact that Palladium isn't breaking down from there. I initially expected a much bigger pullback from 1,000. And when we realized that this is just a flat top triangle, a wedge, a bullish wedge, if you want to call it, I said two things. That first of all, I expect a bullish breakout from that. But second of all, I expect that this is going to be like a last hurrah before, some type of a bigger pullback. And, we've seen two very strong days higher, and now Palladium seems to be finally pulling back after briefly pushing to all-time highs. So that was a very, very nice bullish trap there. and I would be quite careful. Of course, there is always the chance that we're going to find support in the previous resistance area here at 1095, but my gut feeling tells me that we will need a bigger corrective move lower after this kind of a parabolic move higher. Okay, so I would ideally want to see a little bit of a more complex move lower. For example, let's assume something like, this before higher. I wouldn't want to see just a couple of days. I would want to see something more. And in that case, I would be willing to buy palladium because I think that it's now proven more than certainly that this move lower was corrective in nature. This move higher is impulsive, but I want to see a decent correction before getting involved for the next leg higher. Okay. Coach, I just realized that we're exactly at the top of the hour. You have an interview today, right?
Look at the beautiful website page,
You're
webinar
absolutely
page
right.
you made.
You're absolutely right.
I mean,
And
it
let's
should
see.
come off.
Scheduled interviews, and we do have Jake Tiley, right?
Yeah, Jake Tilley's here with us, just trading
Option
and
trader and
trading.
financial markets consultant specializing in trading, indices, ETFs, Momo, and futures for the last 7 years. Okay,
Yeah.
perfect. So, a non-event from the ECB to recap. First of all, I want to thank Joe for being here with us. And, you should join us more often. I know that people want to hear your voice. Second of all, ECB so far a non-event, and I think that's exactly what Draghi aimed for. And lastly, last but not least, enjoy the interview, and we'll see you all tomorrow for the last day of the week.
Yeah, it's TGIF. Okay, Jake, thank you so much for being willing to come back and return to be grilled by me. So I'm making you the presenter. I don't know if you brought any charts. If not, I'll take over the screen, but looking forward to hearing your voice.
Good morning. How are you?
How are you, my trading warrior brother? How's it going?
Oh, I didn't realize I'd be on camera. My goodness.
You don't have to be, Jake. You could turn your webcam off.
Yeah, that would be interesting how I do it. I've got my Yahoo Serious hair on. Let me go put my hat on.
People are so,
don't worry. Don't worry about it. I just closed the camera for you since you didn't want it.
No, you can put the camera back on. We're cool with that. I like transparency.
Okay. All right, Jake.
Good.
So, Jake,
I sent you a webcam request. Now, if you want to reopen it, you can do so.
You bring any charts or anything today, Jake, or you want me to flip around on the charts?
I didn't, but I'm sort of gonna.
That's all right. That's
send
okay.
You, fetching charts so that we can understand how to proceed.
Oh, okay.
So the charts are your charts or my charts, but just we could look at Tesla. We can look at the palladium. I'm glad you mentioned that. And
I'm going to show my screen here. Okay.
Perfect.
So this is where I want to start, Jake, because to preface it, last time you were on, Jake communicates with me on Twitter, and he talked about this gold share that I never heard about. It's traded on Toronto. I think we're down here, Jake, and the gold is still in a bear phase. And I went, wow, look at how strong it is. Gold still hadn't even bottomed at 1160 yet. So one thing for sure is, it's one thing to know about a whole sector, but to be able to pick out, unless you're running investor relations for this company, this was a phenomenal move, close to a triple, 2.5 times.
We looked at it on one of the clues is on really red days, it acts flat or up to buff. So that's the range.
Red days in gold you're talking about?
In anything, if it's like Tesla, the market was getting trashed, and yesterday it just was explosive to the upside. I didn't read it as correctly. I believe that there's some questionable accounting practices going over on Tesla, having studied Fannie Mae, AMBAC, and others like Valiant and Concordia Health. But getting back to Wesdome, it really did act well on down days, and for that reason, you have to pay attention. And then you look at the volume, and that's a really important distinction. When markets are going down, say a sector, gold, and it's up 2% on the day, own it.
Okay.
Unless there's some material information or unless there's some questionable things going on, it's a sign that it's got just less distribution and it can move forward.
It has sponsorship.
Sponsorship, thank you.
Okay, so something that doesn't have sponsorship that you talked about with me on Twitter today, and you think is really, really behind all of this, which means we have a systemic problem. That ground zero is Europe with Deutsche Bank. We gap lower yesterday, and people could see that the long term, people have been talking about Deutsche Bank and the problems and the derivatives that they have off the books as being a possible black swan. Is this what you believe is going to be the catalyst for further weakness on global bourses?
Yes, we saw a move on palladium from 1070 to 1130 on significantly.
This is Deutsche Bank.
Yeah, I'm channeling that, and okay. I believe that the metals are going to get a bid here because the derivative the derivative book for Deutsche Bank makes Banco Monte Paschi look trivial. And they were bailed out for 20 billion plus after consecutive losses of 3 to 13 billion euro in a few quarters back. And in 2013, I said Banco Monte Paschi was going under with 5 Italian banks. I told someone prominent in Italy this, and they told me to leave the room with expletive being shouted, just because of our algo seeing something. We have a proprietary algo that we're in talks with an actual major firm right now, so I can't get into that, but I am pleased to say that Deutsche Bank at 36 was questionable. At 22 looked like it would be required a bailout, and then when it broke 15, I was saying 11 needs to hold. It broke once, it came back up, and now it's in perilous territory. Okay. I'd like to ask your thoughts on, when you look at a chart like this, what does it say to you?
Well, thanks for interviewing me. I appreciate it, Jake.
Real vision is later. They'll come back to you, Dale, I promise.
All right. Okay. So when I look at a chart like this, I have a hard time wanting to launch new shorts. I'm seeing divergences developing on a lot of time frames. I'd be looking for some type of buying opportunity in here, although we're not confirming. But I'd say you kind of have either an exhaustion or breakaway gap, and I would wait for the gap to be filled, just like I wait for throwovers on a lot of different markets, like the dollar. So I think that if the market gets some relief in the dollar, and a lot of people are just, completely bullish the dollar, and I am too. I think we're going to take this high out eventually, but I think we might get some relief where we've been getting some pressure if the Dixie could close back under 96.20, and that might even help Deutsche Bank. I've heard.
Look at the DAX. Look at the DAX overlay with the Deutsche Bank from 11,700 to 11,060 yesterday. I think we sent out a signal to cover any DAX short at 11,150. So if you overlay it, just it's pretty interesting.
I don't know how to do that, but anyway.
Well, there you go. You can feature it and then go back to Deutsche Bank.
Okay, so they both look very similar, is your point? Is that
and I'm looking at a debt. I'm looking at debt. The institutional players are looking at debt in Deutsche Bank, because if it does get bailed out, it gets bailed by Germany, right? They can't let it go under any circumstance.
Okay. All right.
The
So
derivative book, though, is probably 18 times more Banco Montepaschi's minimum, if you
So
ever look at it.
is the derivative book, they still have stuff on the books from 2008 when things
I
were
think
really ugly?
I think they're tied in with debt and covenants that have been breached so badly. And people have died over Montepaschi. There's about 6 deaths regarding Montepaschi, the Vatican, and Deutsche Bank. So there's questionable paper that is out there. Now, the question that you have to ask yourself is,
Well, I'll tell you one thing, Jake. After talking to you, I'm not applying for a job there.
my friend's one of the head traders there, and I speak to him rarely because he's terrified that I'm going to be right.
Yeah, I can imagine. Yeah, him talking to you every day, and so I mean, what do you think is going to happen? Continual erosion on a bailout. What would happen to like the shares trading at $10? Where do you think they'd be for someone to come in? We know in 2008, what they did with not Lehman Brothers, but the bank that was bailed out for, I think, $3 a share. I forgot the name of the firm, but would it be something like that they'd come in? Huh? Bear Stearns, right?
Yeah.
That they'd come in and say, okay, we'll bail you out, but at $3 a share.
I think it was ultimately $12 a share, but didn't it go to 2 or something?
Yeah.
And then 12. Yeah, it was 29.
That's originally what they offered him was 2.
2. Yeah, you're right. It was 65 on Wednesday. I sent a note to my friend who is the former CFO of one of the institutions in Canada, Royal Trust, and it said, I'm concerned about 3 companies staying solvent. It was Bear Stearns, Merrill Lynch, and Lehman. And the next day it was $29. He sent me a note. He said, I can never have coffee with you again. My portfolio implodes.
Yeah. Well, I mean, you don't have to be a genius to know that even when our indexes were making new highs, Jake, the XLF never really got going, even when rates ticked up. But the yield curve, do you think the yield curve is going to invert finally? We've been headed in that direction for a while.
Question, but I would say that one thing that isn't on the radar, it hasn't been talking about, once we had the Turkey issue, not the Khashoggi, but the fact that the lira went 350, into say 750, I think 740 on that intraday spike. Argentina isn't on the pages, but if you look at the Argentina ETFs and what's been going on there, and the rupee slide, you can really see what's going on worldwide. There's a question in emerging markets of solvency, and then we saw Pakistan requiring a bailout, and that caught everyone up by surprise. So if you keep that in mind,
I don't think they've gone to the IMF in quite some time. I mean, a lot of South American countries, they're kind of like on the 10-year plan. Every 10 years they go to them, but I don't think Pakistan has.
Wow.
Huh?
Brazil is also in some serious, with serious issues on their debt.
The whole continent, Venezuela.
You could put all emerging markets in that basket, and that's tied to the slowdown in China, very, very pronounced slowdown in China, and question regarding geopolitics in Europe and American leadership and whatnot.
Where's the S&P going? Where's the S&P going? Here's a weekly chart, Jake.
It looks like it bounced today. I really feel we could track back a little lower. We could track back a lot lower. Pardon me. But what I'm looking at is the midterms are November 6th, right?
Yeah.
We can't have too much of more of a down move, or that's going to be a question mark for the GOP. So I think we're going to see a bounce. I wouldn't be surprised to see I haven't really been following the ES as much as the NASDAQ. I'm watching for leadership.
Okay.
Google
There
at
you go.
12:35
There
was
you
a
go.
sell. Amazon. Sorry?
So when you and I were changing, predictions, and there were a few jiggles that gave me a little heartburn. This is why I was talking about 5,800 in the NASDAQ 100.
Yeah,
Right
you
there,
said
that line. Yeah.
Yeah, you have been on that. You've been very exact. The way that I look at it is Amazon is leadership. Apple, it's coming into that end of year, and it usually does well. You've got Netflix. I don't trust their debt, and I don't trust their business model. I mean, it's been a phenomenal performer, but I stay away from Netflix. And Google has been underperforming on good days. From 12:35, which is our algo sell signal across the board, we said just whatever day that was, 12:35 Google, I think it popped to 12:45, but that day, or 12:53, but that day really said across the board, out of NASDAQ, out of tech, out of, and that's really important, that 12:35. I don't know where Google is this morning. I think it's around, it was 10:57 yesterday.
So you're looking, you're selling rips, it sounds like, from here on out.
Yeah,
how about
I'm not trusting the fabric or the structure of the market, but I know that we can, and this is a nimble trader's market, and if you don't have wide stops or optionality employed, like yesterday at the lows, we went long 71, or sorry, we went long the ES at, let me just look at what we did. So we went long on the ES, put up the ES, I'll show you where we were long. Thank you. So we're looking at what is the ES right now at?
26.75, the low yesterday near the close was 26.51.
Right, so the calls yesterday around 73 to 80 on the 2700s for December. We get a rally above that, it can make about 20%, just to give you the kind of optionality that is being employed.
Okay, so you went in and bought call options, looking for 730
for 2700, but for 73. But if you look at the SPY, which is what we love to play tennis with, as I like to say, Federer style, back and forth with genius. I'm not the genius, the market is. That's the difference. Put up the SPY, and then I'll show you. This is the real chart you want to be watching.
But I'll put it up for you.
Thank you. I call you Eagle.
Yeah.
Yeah,
it's a pretty good animal spirit. I could soar high above the world, man.
Exactly, and it's a Steve Miller, Fly Like an Eagle. So
yeah, that's right. Okay, so here's your SPY. Here's your SPY, Jake.
All right, so at 265.32 yesterday, 267 calls were flashing on our proprietary IP, and we got up to about 268.12 this morning. So if we get any kind of rip, those will be up roughly 60 to 120%, depending on what you're in.
Okay, if you're not a nimble trader like you and like I used to be when I was younger, what do you tell people to do in this environment? You tell them just to sit on cash?
Be in cash and go to the beach.
That's it, cash? Any bear market funds you like for a hold, or
no? They usually implode and pump liquidity fests, and unless you're with Rob Arnott of Research Affiliates or whatnot, and he's have been challenged. The aircraft carrier movements of these bigger players, they don't lend themselves to this algo love community of hit it to quit it machines that will just tear you apart.
Yeah, actually, I talked to someone that was interviewed in Market Wizards. I have him scheduled for an interview, and he said tape reading's done. It's being run by the machines. He didn't sound happy. And here was a guy who was
like a machine now. Tape reading exists. It's just machine tape reading.
Okay. All right. How about some long-term Well, you have any long-term view on energy? The energy stocks and crude have been coming down lately. Anything for, like an intermediate term hold that you have an eye on? Could it
Well,
be?
Microsoft can continue to raise debt and is still beating knocking the cover off the ball like the Boston Red Sox, even though I like watching the Dodgers get to there. But if you look at Microsoft, they really have been knocking the cover off the ball. They're going to benefit from AR, VR, and they're improving their search. Google's search is getting less powerful. There's other companies out there. It just look at that drop on Microsoft. If that isn't a bounce or short-term bounce, I don't know what is. They can raise debt until it's $200 a share.
Yeah, the 200 moving comes in a couple bucks from here.
Yeah,
So,
and you know what? They're performing well and hitting on all cylinders from what I see. On the energy, 70 is above 69 you can buy it, and below 68 you can sell it. But between 68 and 69, I don't like to have anything on except maybe depending on the movement in the CAD actually, then calls or puts in their December strikes.
okay. So if people wanted to take advantage of your signals, what do you do? What's your business model? You have managed accounts, a hedge fund. What's the best way for people to, take advantage of the algo that you created?
Well, we're building more IP, so we're building more algos as we speak. Fortunately, I'm in talks with a few firms now, so and they're pretty deep into negotiations. So I expect that we're going to be tying in with a firm, and we won't be available, but there is some retail reach through Just Trading and another site that I'm putting together as well. So that'll come out. Okay. I think people should just sign up for ForexAnalytix, for lifetime and benefit from the study and the great rigor that you guys do. And you know what? One thing about this market is when people have egos, they lose. I'll give you an example. If you follow what your previous speaker said regarding the euro at 113, I can't remember exactly what, but around those levels, and if you look at it, and he's right, the Italians want this to work, even though they don't want to say it. And Salvini is a power over there, and we've said this having analyzed it for the last year. If people just follow ForexAnalytix on a daily basis and they charted and learned and put in their spreadsheet what you guys say and what your guests say, the amount of learning for Forex analytics that teaches you, it's just incredible. So I really appreciate watching beautiful charts.
You come into Face every day?
I see your charts every day. I don't go in just because it might sway my thinking, and I find less is more. I mean, everybody's got the metrics and the charts and every level on Earth. I find that much less is much more. I figure out a thesis, and then I work with that, and then I cut my losses quick if I'm wrong.
Yeah, you could get in. Sometimes I do suffer from information overload. Well, and I just don't want to know anymore. Someone send me a chart. I just, already have narratives and technical things in my head. I don't want any more, information. It's like my head will explode.
Well, here's the interesting thing. That Turkish ETF, I think it's Argent, and AGNT or something. When you look at what's happening in Argentina, that's probably related intricately to the U.S. dollar rise above 95. Right. And 95.61 is really the level. I wouldn't be short until 95.61 on the dollar. That being said, I have a dollar bear thesis. However, that Argentina default that looms within weeks, and if not days, is going to be what is the pressure point on that US dollar going higher.
Okay. What a great interview. So I appreciate your time, Jake, and you're my trading warrior brother. You could follow Jake at Just Trading on Twitter.
We put the G in your pocket, and that's for Genius and Greenbacks.
Okay, buddy. You sound like
right.
what's that guy's name on CNBC that talks in acronyms every Friday? Very interesting guy. But I want to thank you so much for your time, Jake. Everyone, you can follow Jake at Just Trading, and here you go. Here's Jake right here.
It's Jake Tiley, and it's Just Trading.
Okay, so you say it Tiley, and
it's
and
always Tiley.
okay, and don't forget how Deutsche Bank is going to be a major anchor on this market's neck. So if you want new highs in 2019, you're going to have to look for something constructive to come out of there. So thanks again.
We're headed for more financial, question marks in the next year, but the rips are going to be sold and the dips are going to be bought until otherwise proven.
Okay, so be a trader. But Jake Tiley says be a trader. Don't marry anything, just date.
I'm on Instagram as Jake Trader, and that's a fulfilling prophecy that you've just said.
All right, buddy. Thanks a lot, Jake. Good hunting.
Let's rock and roll.
All right. See ya, and see everyone in face. To wrap it up, TGIF. Remember, don't just count your pips, count your blessings. And God, how about that for a testimonial about ForexAnalytix? He said all people have to do is come in here and write down and record what we're saying. You get a lot of great info here. Forgot to ask Jake if he is a subscriber. And regardless, join our team. Adios, everyone. Have a great day. Thanks again. Thank you very much again, Jake. And I'll see everyone tomorrow to wrap up the week. I'm ready to wrap it up. Adios.